Hey YouTube, hope you had a great week of trading. As always, if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I want to talk about my Robinhood portfolio, currently at $840,000. Past year up 41%, so very high growth. Make sure you stick to the end of the video to see all-time performance. Currently, buying power is $50. I do have another high yield savings account with $100,000, so I can gradually deploy into the market when I see opportunities to buy. So that account has a yield of 4.25%. This one with Robinhood Gold also has a 4.5%. So I might transfer some cash into this portfolio given the higher yield. Taking a look at my largest stock position, Nvidia, which makes GPU chips and data centers. And with the growth in artificial intelligence, there's a lot of potential upside for this company. And you can see this makes up 26% portfolio or $220,000, up 2,600% with an average cost of $5 per share. And I think Nvidia has a lot of opportunities in different sectors as they add artificial intelligence layer to their business. And there's going to be a lot of paradigm shifts with, even though there's an impact to jobs in terms of potentially displacing some, but there will be a lot more job opportunities with AI. S&P 500 ETF, this tracks 500 largest U.S. companies. It's paying out a dividend January 31st, and it makes up 17% portfolio or $149,000, 4% on this position. I do plan to continue adding more S&P 500 ETF to my portfolio just because I think it's a good way to diversify with index funds, and there's very high liquidity. I also might open a position in covered calls just to get some passive income. Next is Apple, which makes iPhones. That's the majority of the revenue, as well as MacBook computers and iPads. They also have growth in wearable devices, which includes Apple Watch and earpods. And they're also growing in their services business with Apple TV, Apple Music, iCloud, and the list continues with, we'll see how it grows with Apple Intelligence as they beef up the services across all their devices. This makes up 5.84% portfolio of $49,000, 443% on this position at an average cost of $40 per share. Amazon, which is big in e-commerce, as well as Amazon Web Services, and with cloud computing being required for artificial intelligence, a lot of people are shifting their data to the cloud. This makes up 5.8% portfolio or $48,000, up 123% on this position. Next is Vanguard S&P 500 ETF, which tracks 500 largest U.S. companies, similar to SPY ETF, but this is under Vanguard. This makes up 5.16% portfolio or $43,000, up 22% on this position. Next is Meta Platforms, which owns Facebook, as well as Instagram, WhatsApp, Threads, and virtual reality Oculus Rift. I also have a pair of their Meta glasses, so they're increasing their presence with hardware as they incorporate AI into those devices. This makes a 4.87% portfolio or $40,962, up 251% on this position. Next is Vanguard Growth ETF, which tracks a lot of the growth stocks. This makes a 4.53% portfolio or $38,000, up 40% on this position. Next is Microsoft, which is big in enterprise services and cloud computing and productivity. They have the Microsoft Office Suite and Windows operating system. They also have hardware such as Microsoft Surface devices and Xbox. So a lot of different Microsoft products across used across the world. This makes up 4.28% portfolio, or $35,000, up 321% on this position. And I think with Microsoft's partnership with OpenAI, they continue to lead in the AI space. And since they have cloud services, as people or companies transition their data to the cloud, Microsoft will benefit from that. And they also invested a lot of, I think, $80 billion in data centers. So hoping that will return on investment. Vanguard Information Technology ETF tracks a lot of the big tech companies, makes up 3.59% portfolio, or $30,000, up 343% on this position. Next is Taiwan Semiconductor Manufacturing Company, which manufactures a lot of the chips that are in different products. This makes up 3.22% portfolio, or $27,000, at 167% on this position. Next is Visa, which is a payment processing company. This makes up 2.64% portfolio, or $22,000, at 174% on this position. Mercado Libre, which is an e-commerce platform in Latin America market. They also have a digital payments platform. This makes up 2.41% portfolio, or $20,000, up 74% on this position. And I think Mercado Libre, since they're in the Latin American market, which has, it's an emerging market, so there's a lot of potential upside, pretty high risk, so high highs and low lows, but I think there's long-term, there will be a lot of growth. Alphabet Class A shares, which has voting rights. This makes up 2.22% portfolio, or $18,000, up 250% on this position. And Google, a lot of the revenue is from online advertising. And as they switch or update the product from Google Search, incorporating more AI, Gemini across all their products, I think Alphabet will benefit from that. But we'll see how it does long term, given that that space is being more competitive. Alphabet Class C shares, which does not have voting rights. This makes up 1.86% portfolio, or almost $16,000, up 225% on this position. So across the board, let's see, it's about 4% of my portfolio for Alphabet. Costco, which is in the warehouse retail space, a lot of the revenue is from membership renewals and a pretty high retention rate. This makes up 1.7% portfolio, of $14,300, up 250% on this position. And I think Costco continues to benefit from, even though there's increase in grocery prices, Costco continues to provide value for their customers, and it's a pretty good business. CrowdStrike, which is in the cybersecurity space, this makes up 1.51% portfolio, or $12,689, up 168% on this position. You can see it's pretty volatile since July of last year, all the CrowdStrike issues, but pretty much returned to where it's at just because of their dependence across the industry. United Health, you can see it took a dip with the recent events of the CEO and Luigi. This makes up 1.21% of portfolio, or $10,134, up 208% on this position. So healthcare, United Health, they provide a lot of healthcare services, and they're an insurance payer company. Home Depot, which is in the home improvement space, makes up 1.14% portfolio, or $9,600, up 126% on this position. Berkshire Hathaway, so this is Warren Buffett's company. They partially own, as well as fully own a lot of different companies, and it's pretty diversified. This makes up 1.05% portfolio, or $8,700, up 144% on this position. And Berkshire Hathaway, since Warren Buffett is, he's on the older side, so he plans to transition to a successor and has a succession plan. Palo Alto Networks, this is a cybersecurity company. This makes up 0.87% of portfolio, or $7,200, 58% on this position. I think cybersecurity is much needed, and it'll have a lot of potential upside. Fortinet, another cybersecurity company, makes up 0.82% portfolio, or $6,900, 40% on this position. So I think CrowdStrike, Fortinet, and Palo Alto Networks, those are some of the leaders in the space, and I think it's a good way to diversify across different solutions. Alibaba, which is a e-commerce company in China, they also provide cloud computing services. This makes up 0.76% portfolio, or $6,300, down almost 50% on this position, but I plan to hold it long term just because I think there's a lot of growth in China. It's a not emerging, but they're a pretty developed market. But I think Alibaba will benefit long term as there's more and more dependence on their service. Block, which is a parent company of Square, makes a 0.53% portfolio, or $4,500, down 45% on this position. So a lot of volatility since COVID. Still trying to recover from that. I think I might sell some of these stocks that I'm down on so that I can offset my gains in terms of taxes. Baozun, which is the Shopify China, I'm down 91% on this position, and it makes up 0.04% portfolio. Market value $367. This one, I'm just gonna sell some of it just to offset some of my gains, because I did sell some of my stocks, and you can see that last year I made $12,000. So by selling some of the stocks that I've had a loss on, I don't have to pay as much taxes. And overall, that's my Robinhood portfolio. And to see my all-time highs, you can see it's up 184% on this portfolio, up $544,000. I do plan to continue holding my positions long-term and continue adding to my portfolio just because I think the stock market has a lot of potential upside long-term. And I'm a buy and hold investor, so I don't do day trading or penny stocks because I think that's very risky and very volatile. But I think with a diversified portfolio and index funds and specific stocks, I think I'll do well long-term and will continue adding to my portfolio. See you in the next video.